So what are you two handsome gentlemen doing today?
Good question.
Well, let me introduce myself. I'm Stuart from We Sell Homes in Paradise, and this is...
Hi, I'm Marc from Fluent Finance Abroad.
So we collaborate a lot together because Mark is very good at helping our customers get mortgages. We have quite a strong track record together.
We do.
And I thought it'd be interesting to do 10 questions with Mark because sometimes I stumble my words in how I present the mortgage process in Spain. So I'm going to ask Mark 10 simple questions and he can sprinkle us with his knowledge. Okay?
Go for it.
So the first question, which I always get asked, is what is the loan to value that you can get here in Spain?
The loan to value. Okay,
Yeah.
Just to explain what loan to value is. So loan to value is the loan against the value of the property or the purchase price. So the difference is the equity, the cash that's in between the value of the house and the actual loan that you get. So that's the explanation of what loan to value is. In Spain, you mentioned it in your video before, when you buy a property, the banks will give a loan to purchase rather than loan to value, whichever's the lower, as you quite rightly pointed out. And for a maximum for a non-resident, I think we're talking about, is 70%.
Okay.
70% loan to value. So very simple terms, purchase price 100,000, the maximum mortgage would be 70,000.
Okay, and that includes Americans as well, because we're getting a lot of American clients as well.
Yeah, so in general, I mean, that's the maximum, that's the ceiling. You can't go above the ceiling, you can only go south from there, right? You can only go down. So the average, in general, for a non-resident is actually 60%. So somewhere in between is where most clients would fit.
Okay, cool. So just to be clear, that means that clients need to have 30% in cash effectively, as well as a buying cost, which average around 10 to 13%, depending on whether they're buying a resale, a second-hand property, or new. Okay, so that's question number one. The second question people always ask is, where are interest rates going?
That's a really good question, and if I knew that answer, Stuart, I wouldn't be sitting here doing this video for you now. I would be able to predict the future, but we've seen interest rates go up quite sharply since the start of the war in Ukraine, but that seems to have calmed off now, and we're expecting interest rates to start actually coming down from central banks. So when will that be? No one really knows. The prediction is that the ECB, the European Central Bank, will look at start cutting rates in June, but that probably could be July or August. We don't know. But it looks like the trend is downward, which is great news.
Okay, cool. Well, the third question, which I also got wrong in my own video, was about affordability. Can you explain how the banks assess your ability to actually get a mortgage?
Okay, this is a really good question, really important one as well, because in different jurisdictions, different countries, they have different formulas and criteria of how to calculate. In Spain, everything is based on your net income after taxation. So in a video previous that I saw, you used the example of if you had net income of 10,000 euros. Okay, so in the UK, for example, they use a income calculator on your gross salary, normally four times your gross, whereas in Spain it's different. They use the net income. So, and it's the general rule of thumb is 35% of your net demonstrable income. So on 10,000, your total outgoings that you have disposable to service credit, all credit, cannot be more than 35% of 10,000, which is 3,500 euros.
Okay.
Now we have to be careful here. This is where the banks will take into account what other debts that you have, not just the Spanish mortgage.
Okay.
So your total debts must not exceed 3,500 euros.
Total debt, including the new mortgage you're going to get in Spain.
Correct. And this is why in Spain, it's a bit trickier to fit the affordability criteria. This is why I always seek some help when trying to calculate that.
Although it hampers our business, I actually quite like it because Spain is not a very highly debted society, certainly personal debt, because the banks have really cracked down, so I would imagine because of this, we don't have the bubbles as previously seen.
That's a really good point. I'd like to add that the majority of purchases, more than half that are actually bought by foreigners, are actually bought cash.
Right.
So 45% of purchases at the moment, our job is to try and increase that that percentage. Obviously,
Yeah.
it's in my interest to do that. But that actually tells me, or whenever I get asked the question, what a house price is going to do, is it going to be a crash? Well, very unlikely. Why is that? Well, because there's lots of equity free in the Spanish property market.
Yep.
You know, I lived through the credit crisis, so did you. The reason why there was a credit crisis, there was too much credit around. And
Right.
that's not the case now.
Good answer. I think we're on question number 4. So in Spain, it's always principal and interest in the mortgage. There's no interest only.
No.
Okay, very simple question to ask you. Okay, the 5th question, which I always get asked, apparently it's a big hot topic now, it's about golden visa. So obviously you need to spend 500,000, but do you see a lot of people who will still spend the 500,000 and then increase their budgets to buy properties?
100%. Obviously, the news recently is changing the dynamic a bit, but people who have €500,000 to invest generally are fairly wealthy people, and they do use a mortgage to top up to actually buy their actual dream property, because what they can actually buy for $500,000 these days,
yes,
is not as much as what you could do when the golden visa was introduced, which is in 2013. So yeah, we do a lot of work with golden visa clients to give them the extra cash that they need to buy the actual house that they want.
Well, fingers crossed, we still have a little bit of time before they pull this from the market.
Yeah.
Okay, I think we're on question number 6, if I'm not mistaken. Question number 6 is very much to do with the buying costs and things like that. It's impossible to tack the buying costs into the mortgage.
Correct.
Because I get asked that a lot.
Yeah, that's correct. Now, always think that the Spanish banks will only finance the house, the bricks and mortar.
Right.
They will not finance your taxes.
Okay, very clear.
Pretty simple.
Okay. Question number 7. Obviously, you charge a fee.
Yeah.
Okay. And they asked me, why am I paying a fee for a mortgage broker instead of going directly to a bank? So can you explain why it's good value to use a mortgage broker?
Okay. It's good value to use a mortgage broker, in my opinion, because this is a complex transaction. Buying a house anywhere in the world is quite a big deal, but buying a house in a foreign jurisdiction, a foreign country, is even more complex. There's language issues, culture issues, criteria issues, and you have no experience. So using a tried and tested broker, we've been going for 20 years, so we've been doing this. You do something for 20 years, you should be pretty,
especially in this part of the world.
You should be pretty good at it. We'll offer you guarantees that you're going to be successful, and that it will give you a guarantee and peace of mind that the actual transaction is going to happen in your interest. You will get looked after, you will get the best deal, but it will also be stress-free, or as stress-free as it possibly can. If you try to do it on your own, yeah, there's a lot of pitfalls that you could encounter, and we would take those out. And that's why we feel it should be worthwhile considering.
Okay, so on question number 8 on guarantees, when we take people on viewing tours, obviously they see a unit they like at a development or a house that they like, and it's quite a competitive market, right? Yeah. And so they're likely to put a reservation down, okay, and then they come see you. When they come see you, will they get a good sense of whether it's achievable they can get a mortgage, or is there still a bit of risk after that meeting? So
well, the problem is that we're on a deadline. The vendor will not wait forever.
Yep.
And because this is a complex scenario, it's not like walking into a shop and buying a pair of jeans.
Yep.
That can happen within 20 minutes. Obtaining a mortgage in Spain is a process, and it can. So what we can tell you within 20 minutes is whether or not you're going to be successful or not.
Okay.
But that's the start of the journey. Ideally, we would have that conversation before you found a property.
We would love that as well, that people see you first. Obviously, it makes our life so much easier.
Do the homework first,
yep,
and then go out, because then you have certainty. You know what you're looking at a property you can actually afford to buy.
Well, what I always say to customers is, if you go to Marc and you're very transparent with your financial situation and can back it up with the documentation, you'll be successful.
Correct.
Okay, cool. So question number 9, I think we're on right now. What are you seeing these days? Are you seeing that the mortgage market is taking off? Are you seeing a lot more business, or are you seeing that it's still the cash buyers like days gone by?
I'm seeing that the mortgage market is tightening up. There's 2 reasons for this, I think. First one is interest rates have gone up the last 2 years. That is obviously having an effect on liquidity. We have clients all over Europe and the world, so do you, and you know it does affect people's ability to borrow in their own country potentially, and that has an effect. Another effect which is we're seeing the banks being a bit more cautious is that the introduction of regulation, which came in, mortgage regulation, which came in June 2019. Don't forget we had COVID between then, which stopped the world for a couple of years. So now we're really seeing the repercussions of that. So it's really important, I think, that people who are considering buying a place in Spain, who want to find out about mortgages, they do that as soon as possible, because it's not as straightforward as it once was before regulation, for example, and before the interest rate rising. In 2018, before, it was kind of easy. It was okay. It was, you know, there was flexibility in the market. Now there isn't so much. So but the banks are still really healthy, and they still want to get money out. It's just they're asking a lot more questions.
Okay. So final question, because your arms must be killing you, Tracy.
Absolutely are.
Question number 10. How do we get hold of you, and why your company?
Okay, as I think, well, you can get hold of us by reaching out via the website, which is fluentfinanceabroad.com. We have offices in Marbella and we have offices here in Sotogrande. Why Fluent Finance Abroad? Well, if you want credibility, you want to partner with credibility, and you want security, and you want guarantees, and you want expert advice, then you should definitely speak to us.
Cool. Thank you so much, Tracy. Thank you so much,
Thank
Marc.
you, Stuart.
Well, you heard it. Fluent Finance.